Am I looking down at Royce?
No, we're all looking at you, Daniel, because your bed's not made.
Oh dear God.
Yes, it is. It's directionally
It's
correct.
not.
It is directionally made, but just not maybe as
All
proper as
right.
you would like, Dad.
Like we said, this is like you're going to start your day off half-assed because your bed is half-assed made, right? I'm
I
just
do
trying to
be
be your
like
dad.
that sometimes, you know.
That's right. The world traveler doesn't have time to make his bed because he's too busy traveling. He's going from where he is now to somewhere else tomorrow, and he was somewhere else yesterday or a week ago. I don't know. Can't keep up with him at all. Let's get started with this thing. We're about 30
Yeah.
minutes past the normal start. I will get started here with well, let's do the introductions here. I'm Darin with Arbitrage Trade. This is after not 6-7, Royce. This is after the bell. My guest, top right-hand corner, the best bed maker in Colorado is Daniel Hopwood.
Yay!
Hey! And Josh Morgan's bottom left, the bankster. We also have the very busy, always busy, especially right now, Royce Wells, Quanticus Maximus. And I am Darin, of course, the ape, who I throw poo at things I don't like. So I'm throwing a lot of poo lately at everything. Let's look at let's do this first. We're not financial advisors. This is not financial advice. This information is provided purely for educational and entertainment purposes only, and please always consult an investment professional before making any financial decisions.
Are you an investment professional yet? I want to consult you.
It depends on what professional means. There's I need definitions of what professional is.
How'd your pick of the day do today?
My pick of the day for tomorrow, Throwback Thursday, is up 50% in 2 weeks. So that's pretty good, I would say.
Dang it.
Sweet green.
Hate it when that happens.
Actually, it was a month. It might have been a month. No, it was 3 weeks. It was halfway. 3 weeks. It was up 50%. It was sweet green. We caught it because of the indicators at the very bottom when it was bottoming out, which is where we've been catching a lot of ours lately. And I'm talking about it was the very next candle is when it started up, and that's when we caught it. And now it went all the way up. So yeah.
So did y'all see Hood?
Mm-hmm.
You love Hood. You bring that up every week.
Oh no, I'm just saying it was at $70 when I mentioned it 2 Sundays ago. It's at 88 right now.
Mm-hmm.
So just letting you know.
Well, us apes cannot stand Vlad, and so we will never support Robinhood ever, ever, ever. Even if it goes to 400, we will hate him because he shut down and wouldn't allow AMC to be bought or GME to be bought. And it was sell only. He put everything into sell only. All right.
Shots are about to be fired. It's not personal, I promise. Well, you know what? Here you go.
Shot. There's a shot. Yeah, all right.
There we go. Attaboy.
No, I'm
the best kind.
Now I understand the phrase smart money and dumb money.
There it is. You'll write the script of Dumb Money, the Netflix movie or whatever it
was. One day Royce is going to have a fund, and you better believe Goldman Sachs Prime book always lets you buy and sell.
Right?
Well, Vlad Tenev did not. And others. There were others that did not allow it to be to buy. It was sell only because they had sold way too many shares. All right, so let's go here to the numbers of the day. Let's talk about today, not what was that, 5 years ago, 6 years ago. Dow Jones 49,490. It's up plus 0.69. We've got S&P 500 is 7137. It's plus 1.05. We've got NASDAQ, which was the winner of the day, 24,657. At plus 1.64, the dollar or Dixie is up to 98.43, which is up from last week. We've got crude oil 92.73 and Brent at 101.73, which both are up from last week. Gold and silver are down from last week. Gold is at 47.56. Silver is 77.66. 10-year is up to 4.30 from last week. Bitcoin, crypto's up from last week. Bitcoin is 78.509. XRP at $1.43 and Ethereum 23.94. So what else you want to add to those numbers, Daniel? Before you now will have to wake up to find out the numbers.
Yeah. So, the thing I kind of noticed was that the last like 4 trading days, we've been pinned at all-time highs, right? So from the bottom, S&P is up like 12%, Qs are up like 15, and small caps have done the best marginally by being up 15.8%. They held the best during the correction. And it's kind of an impressive thing when, I was anticipating like the market to, when it ripped like that, it was like, okay, like we'll come back down, have a few gap fills, and then maybe keep going. But it's kind of interesting that it's just continuing to hold that all-time high level, like it wants to break even higher, which is kind of uncharacteristic of how, the general indices move. It's trading more like a high ATR stock. But I think, just looking at the price action is like all of that is ripping. Bitcoin's starting to rip, but gold was down and crude oil shot back up. So it's kind of confusing if the market is pricing in like, which we'll get into an update or update on the war in a second, is like, are we pricing in the war like being no risk, like some risk? Like it's kind of a precarious spot, but it feels quite bullish, which we'll get into at the end of the show.
I don't know. I think the war is irrelevant. It feels like the war is irrelevant. It does not matter.
It does not matter.
It's wherever
it doesn't feel like
the charts tell you it's going. That's all that matters, no matter what happens in the Middle East. So anything you guys want to add anything to that as far as what the intro of the market, what it's doing right now? Like you said, you
like it. It's a dead cat.
You like it,
in my opinion.
Yes, you have said that.
Yes, I think that basically this is the bull trap, just like the 2008 bull trap. But don't take my word for it. I'll see you in a few weeks.
It's rhyming, he says. It's rhyming.
To be clear, I wasn't saying a prediction. I was just saying how things felt solely based on price action, not using arbitrage bands or anything.
Well, to be fair, you did not open up with "We're back, baby" or whatever it is you say. Whatever that annoying Goldman. Every morning at Goldman chant was said, I'm sure.
Shout out to my haters.
Damn.
Anything, Josh, before we run on to the war?
No, I'm good.
No, okay. So let's talk about the war. This thing that evidently doesn't matter. They can jawbone the markets up within a day with it, but overall, it's not doing anything to the markets. And I'm tired of hearing about priced in this, priced in that. Now the newest thing we have is Warsh and his talk and whatever he says within his Senate confirmations or whatever it is they're going through right now. And then they all try to guess what he's thinking and what he's going to do when he gets in place. And is he going to be Trump's puppet, or is he going to be or is he actually going to be independent as the Fed should be? So that goes through, and that causes some spikes up and down and all this crap. So right now, I believe more of what Royce is saying, that we're going to hit our little heads on a ceiling again and fall. So, but I'm back to where instead of up and to the right, we're going to fall. Anything else? War? Come on, Daniel, tell us what you had to say about the war.
No, I just thought it was really cute that you think at any point the Fed is independent, but
no, right? Trust me, I don't. My tongue was firmly implanted in when I said it, because it definitely is never, in my opinion. I don't think it's controlled by whoever the president is either. I think it's controlled more on a world basis by certain entities. What the Fed does here. So
I can't wait till you meet them. That's going to be a great meeting. Let me know how that goes. Just real quick on the war. So, Trump indefinitely extended the ceasefire, keyword indefinitely. So, it feels like it's starting to be kind of a nothing burger. Iran didn't respond to our negotiating position. So the next talk was, didn't happen, but both sides are continuing their blockade as of now. And I believe Iran was like shooting at 3 different ships this morning that were trying to kind of sneak past. And that was why oil jumped, they said. And it doesn't seem like the market cares, kind of what we were saying earlier. but I do think it's still like a non-zero factor of like, if that strait does shut, like it does cause real issues in the world, which would affect markets.
You would think.
It's already going to affect it. It's. I mean, as long as as long as it has been shut off, there is a future problem with this. I mean, with helium, with fertilizer, everything else is going to go out. It's already affecting the farmers. The farmers are getting very nervous now about how they're going to grow crops because of the lack of fertilizer. It's prices that are $4.
What?
Yeah, it's and
That's
helium, by the way.
Oh, never mind.
I'm just telling you, I only repeat what they're saying. So it's helium, fertilizer, and oil.
Nitrogen.
Those are the big threes. There's more things than that come out of there, but those are the big three things, which is part of the let's just say the story that's being painted out there. And when you talk about the fertilizer, we're not talking about just the U.S. here. We're talking about world's fertilizer that comes out of there, the world's helium that comes out of there, the world's oil that comes out of there. So. And then of course the contagion, if something happens over in a country across the sea, it's going to have contagion eventually to us, and we'll be the last to feel it. So I do feel that what's already happened, you won't hear the media say this, but what's already happened is going to have an effect, and it'll justify that dead cat bounce, and it'll be the effect that's happened afterwards that drives the markets back down again, which is where the algorithms were going to go anyway, right? So maybe. What you got there? Indefinitely extending means that he could stop it tomorrow, or he could let it go another month, whatever's convenient for him, right?
Yep.
So when you don't put a definition on when it is and it isn't, then that means you can do whatever you want, which is exactly where he wants everything. What do you got there, Josh? I see you thinking of things.
Well, it's not. I mean, I just kind of think one of the interesting points that a lot of people have been making lately is that we keep waffling back and forth. Like, even though the Iran tensions haven't really eased, the market seems to be back to, yes, to Daniel's point, we have been kind of pinned, but we've also been pinned at all-time highs, and we're continuing. Like, we got back up there pretty freaking quickly. But I think it's because we're at that stage where, we're at the Trump playbook. We're at like step 6 or 7 or whatever it is, where you can actually start seeing the craziness settle. There's a light at the end of the tunnel, and you see like all of the posturing and everything that's happened. You're starting to see signs of like a little bit of de-escalation. And every time that we've had that, whether it be the tariffs or, everything that's happened over the last year, and now the war that we're enduring, we're at that point where we're getting to the de-escalation signal. And so once we hit that, the markets always seem to react positively and can kind of brush off the rest of it, because at least at this point, there's a light at the end of the tunnel. This is no longer, and yeah, we might have some issues with some lingering inflation concerns and pricing concerns. And yes, there are going to be some lasting effects, but those are things that are 8 to 10 months down the road. So the market's just kind of digesting what is currently in front of them. And yes, we're kind of at that stage where we've hit that. We're kind of, I guess, that we can kind of see where this is actually headed, where this is going to pan out. And barring anything catastrophic or any kind of insane escalation, which based off Trump's typical actions, that doesn't happen. But
never.
He goes crazy for the first few steps, but then once we get to this last bit, that's when things kind of tend to settle. And I think we're at that end stage. And so I think that's kind of why not only are the tensions with the war still palpable and still real, everyone, the market and everybody's kind of assuming that, okay, we're back to something that's tangible, something that we can actually understand.
Well, all politicians, they have to, I won't say create a problem, but maybe that's what happened. And then they have to be the savior of it. So that's what I think we're setting up for, is that when it comes to an end, it'll be, see, look what I did. I fixed all this for us. And that's the political playbook. All right. So PDT is gone. Is that what you're saying? I only need $2,000 now instead of the usual $25,000, which is what I was playing with back in 21. I can just play all day.
It's evolved. And I know this is probably your favorite story of the week, Darin. So I'm very excited.
Hey, I got over that PDT. I was excited the day I got over that rule and could play with it during the day back then. But of course, we all know that fast forward a year later, and I'm back under that rule. But go ahead. What is the new one?
Well, don't worry. With the new rule might apply to you. So
Right.
the SEC approved a FINRA rule change to lower the margin requirement for frequent trades. So the old rule of the pattern day trader rule is traders who make 4 or more trades within 5 days have to maintain a minimum balance of $25,000 in their margin account, right? So this is specifically if you have margin turned on, right? And if you make more than that, you can't make any more trades.
Yep.
So the new rule is you have to have $2,000 in your account, and the risk is managed in real time intraday. So what that means is that it's no longer how many trades you make. It is, are you able to maintain the margin requirements intraday? And if you are, you're fine. If you're not, so essentially a position goes against you really quickly and you're not managing it, it doesn't explicitly state, but most likely your broker would force you out to meet your minimums, which would put you below the 2,000. So my personal, because, I think we should probably just get everyone's opinion on this. My personal opinion on this is that this is not good. You're just going to have a bunch of small accounts blowing up way quicker on options and margining themselves when, $25,000 was it a little high? Maybe, but it was like, okay, you got to have a bit of capital to play the game on risky mode. So, I think this is kind of like when they open up alternative investments to retail. It's like everyone's like, oh, democratize finance and like all this stuff, give the returns to everybody. I'm like, it just never works that way. Like, you're just gonna have a bunch of 20-year-olds blow up the last $2,000 they have. Like, this is the equivalent of prediction markets being brought to
and maybe this was
stocks.
Maybe this was to compete with those, so that maybe it'll bring some people back into the markets and away from those prediction markets, because they are in a battle right now for that money and for the same money from the same people. So, but yeah, 2,000. I think they're slobbering right now over it. Honestly, if you can see the top execs at the investment banks, they're having to wipe their beards because they're slobbering so much over what's going to happen when this happens. Because oh wow, it was easy to take money from retail since we can control the price anyway. Now it'll really be easy to take it from them. In fact, we're going overnight with so many of them that we'll get them overnight.
Yikes. Yikes.
Get them on margin, make a little extra money.
Yeah. Any opinion on that, Josh?
Oh yeah. I mean, I'm definitely with Daniel on that. Like, the $25,000 requirement initially was set, and I mean, again, back when all of this was created, was initially set specifically to prevent people with, a whopping $2,000 in their savings account from wiping it out, within a couple of weeks. And if you had enough, 25,000 was enough that you could, if you were smart enough, if you had that much money to burn, you were probably financially well off enough that it wasn't as big of a concern. But now they've opened the floodgates where everybody, if you got a couple grand, you can throw it into some naked shorts and blow it up in a day. And the only thing that's stopping you is this intraday margin level algorithm that all of these various companies are going to have. And so, you can get a margin call on 10 o'clock, 10 a.m. on a Tuesday.
Yep. Yeah,
But
I wish they'd get rid of wash sales too while they're at it. But go ahead.
well, I was going to say there was an interesting thing kind of an interesting angle to this is one thing that we've talked about a lot, in these shows is chasing liquidity. And this is actually really great way to, I don't want to say artificially, but to inflate stock prices and to inject a bunch of liquidity, because there's a lot of people that are going to go, with their Robinhood accounts that are going to jump from, I put $50 on Kalshi that, Al Khamenei was going to die by August 1st of 2027. And then now I can just, I'll just throw $50 onto a, naked short position, against Ford, betting that they're going to go down to a penny, and be like, yeah, okay, it's $50. I can buy 100 different calls. And if it blows up, if I win, I'm up, 200 grand. If it blows up, I'm out 50. And instead that's going to be literally, it's like playing scratch offs at the gas station. It's
a lottery pull. It's a slot pull.
It is.
Josh makes it sound fun.
That's exactly what they're trying to make it.
It should be a casino director.
You hear about all these people, playing options or stocks and getting rich and like, oh, I made so much money off the stock market, but it's a much more difficult game than everybody actually realizes. And I can see a lot of people, a lot of innocent people putting money into something, and you're gonna think, Darin, this would be relatable. Think about back in like 2018, all of those like pump and dump stocks. They literally just gave a bunch of poor apes a bunch of poo to throw. And
you mean like the biotech stocks are right now?
Yeah.
The pump and dumps. Yeah.
Anything that's hot and you think, okay, I can chase it. But if you chase, you're going to get burned.
Yeah.
Yep.
That's true.
Yep. Because you are out funded. Whatever you try to do, you're outfunded.
Unfortunately, yes.
But there is there's one more thing that I have. It's like, I do wonder how this is going to change a little bit of how the algorithms work, because this is actually going to, I know it's not it could be a massive amount of money depending on how much this catches on, but the amplified volatility that's going to come out of this from all of these people that are creating and chasing a lot of these pump and dumps and things, it's going to mess with a lot of the algorithms and a lot of the numbers. And so I'm just kind of interested to see how the fallout is of that.
But there's another layer. Don't forget the 401ks are going after that now, and that money. So they're basically going after any fund that's out there that they can get their hands on. I can see them doing this. Like, we're going to get the 2,000 limit now. It's way down. They're going to throw their money at us, and we're going to grab it. And also everybody's 401ks. We're going to grab that and play with it. So they're basically going for the rest that couldn't be touched in the past. Now they're going to be able to get their hands on it. So the money available, money funded, etc. They're throwing everything out the window. But I kind of knew that's what the Trump administration would do. It's the wild, wild west. All right, is Apple back? That's your next question, Daniel. Just because they have a new CEO and there was a succession planning going on, and so they're trying to say, yeah, that's all it was. Although it really was weird how it happened. It was kind of a lot sooner than what everyone said was going to happen, and all of a sudden now he's out in September. He'll be replaced. Forget the guy's name, John Turnus. Yeah, Turnus. And what does this mean? Is this just another way of making the stock pump, or what? What's going on?
Well, what's your conspiracy here, Darin? I know this seems pretty standard CEO switch of a company.
It does, kind of, but I think all of these, for me, over the last 4 years, there's been an awful lot of CEOs step down and directors step down, et cetera, and we have this whole island thing going on too. And I don't know. I think when it all comes out, maybe some of these guys are making their exits now so that they won't be named later. I'm not saying Tim Cook.
I think CEOs just get old, Darin.
They
want a break. They want to
go home.
Don't talk about Royce like that.
They just want to go home.
He's not that old.
I can't wait until.
Okay, but do let me know when you're stepping down.
Okay. By the way, Josh, you will definitely know when I'm stepping down. Matter of fact, everyone on this channel will definitely know when I'm stepping down.
Okay.
It's like that.
I won't say anything, but there will be clues.
That's what I was going to say.
From a private
lots of signs.
That's what I was going to say.
But
whenever that board seat opens, just let me know.
Okay.
There might be some cocktail umbrellas involved. All right, no conspiracy on this, but it's just the timing was weird. But no real conspiracy on this one. Go ahead.
All right, I just last comment is, Darin, I can't wait for the day that Jamie Dimon steps down after like 20 years at JP Morgan.
No.
Like one of the best CEOs of all time, and like your conspiracy theory is the shift of world order.
You heard that?
When really the man is just like 70 years old and tired.
No, remember that he helped fund these little transactions out there, didn't he? Anyway, no, the man that we all see, he left. He even got cut off because of that. Oh, wow. Look at that. Right after he said it.
It's like, and we're done.
He starts talking crap about JP Morgan and random things.
Who's next? Who's next?
Right?
We'll see if he comes back on here anytime soon.
Not good.
But it is an interesting, it is kind of an interesting, I guess I will say it. It's kind of like a seismic shift in philosophy for Apple, because they're vastly different backgrounds. Like Tim was more business development and like supply chain, and Turnus is more of, he's very engineered. He's obviously very engineering, but very mechanical, very hardware focused. He's always been in the product development life cycle. And I do kind of wonder if this is going to be almost like a revolutionary situation, because if you look at Apple, their product releases over the last year, they've just put up a bunch of overpriced junk, and none of it's been very ingenuitive. And when they
tell me how you really feel.
I'm not an Apple fanboy. Everybody knows that. But
me too. I'm not.
Yeah. But none of it's been very innovative. It's just been, trying to catch the trends. But the one trend they seem to have missed is the AI one.
Right. They were the last, one of the last.
Way behind in the AI space to the point where they just kind of threw in the towel and said, Google, do it for me. And so it'll be interesting to see. And even, I was talking to a buddy of mine who's a huge Apple fanboy, and he was kind of saying, he's like, look, the hardware has been mid, the software updates have been have been, lacking. And it just really had everything that they've come out in their releases lately have just been underwhelming. Nobody is really jumping to upgrade like they would have, 5 or 6 years ago. And I think Tim Cook just kind of, I don't know. He didn't really grasp that. And especially considering how quickly AI is revolutionizing things, I do think that it'll be nice to have good to have somebody looking at it from a very different perspective. And then again, Tim Cook's still there, so he's going to offer all the advice that he could ever need, but he's no longer at the helm.
Well, the new guy's a hardware guy, right, Daniel? Yeah. Been there since 2001, and is probably going to be more focused on that. I almost feel like Apple kind of, how the fat king gets kind of happy with his kingdom, and it's like doesn't really work hard to keep the kingdom, at the fore. That maybe they just got, and plus they are such Apple themselves, which is why probably Josh and I both really don't like them, is proprietary. And it's like, well, we've got all these people in our grasps and they'll never leave. So we can be slower with our AI and make decisions on our own, et cetera, et cetera. So maybe that's why. And it was just time for a change to try to, so they can do some new, they were going into like earpods that could see in front. They're starting on the IA now, but it's like they were one of the last. But Google was also given that title of being one of the last, and they've caught up. So it's just whatever the the funds want to portray out there. Any since you're an Apple guy, Royce, any comments on this at all?
Yes. Where's my Google Play? Oh.
Exactly.
I have a Samsung Google phone. All right, let's do this.
See, no, I think they definitely need to do some more innovation. They have been living on the merits of the previous builders. They haven't come out with anything new, and because of that, I think basically people are stealing market share from them. I think that eventually, if they don't, there's a good chance that they will either lose market share just because you can only do so many versions of a watch, a phone, an iPad, right? So I would love to see what their new innovation is. I know like the Apple Intelligence for their AI.
Right.
But it looks like it's just rebranded ChatGPT. So,
right.
Hey, new ideas, people, new ideas.
Yep. Well, I mean, they got to repackage them. That's the way marketing works in the tech world. Is just repackage what we already have and make it sound like it's new, and maybe add a few lines of code. And hey, we got a new product.
New product, yay!
You slowly put it out there, stuff the military's been using, and then they slowly pull it out, that technology, into the civilization, and then we slowly pull it out and raise. This is the next level. This is the next level. We want your money. So I mean, that's just the way it works. Did we kind of hit this already? You said meme stocks are back. I mean,
well, I don't think we were recording when we talked about some of this.
Okay, no, and that's what I'm saying. That's next on the agenda before we wrap up here. What we did talk about Avis going up from 300 to 700 or something. Even before that
today, on a short squeeze.
Oh, go ahead. Now, this is what I want to bring up, of course. Why are they saying that this happened, Daniel?
Oh, I don't know. You tell me. Okay. I haven't read about it. I missed the news.
Because I'll put it in Mattermost. But anyway, the institutions have 140% ownership. So if your float is, let's just make it easy, is 1 million shares, that means you've gone out there and you have sold more than that, 40% more than what your float is. So, and that was just institutions. That didn't count retail or funds that don't have to report, like all of your shadow banks. And it doesn't include the, I forget who else it didn't include, all the hedge funds. So these are the only ones that you can, public available information on, and it was 140%. There are others out there that have gone way over the 100% of a float. So it's become a problem when they get caught. And the problem with this was there was just, I think most of those, that 140% was just two institutions. And when it comes time to pay the piper, there's no shares out there to go grab and get and create. And that's what's causing this push up, which is what happened with GME and AMC, like you said, back in the 2021, 2020s, whatever. And every now and then I'm seeing some things. You said Allbird, yeah. And they, this is what those biotech stocks do, by the way, is they change to where now they're a treasury for crypto. It's like they go from being a medical company to all of a sudden we're going to be a treasury for crypto, and then they go up 1,000% overnight. It's usually across the seas over there, so you're about to be back over there again. Find us some of those, Daniel, please. AMC did do that for a little bit, but it's not. You can't consider what we're doing right now at AMC as anything. It's just a blip.
Yeah, no.
And same with GME. It's a blip. It's doing nothing now. But these others that. Some of these guys were mentioned back in the 2020, 2021, and that's what's getting apes excited, is because, these are the same stocks that were being pushed back down back then, and they're waiting for it to happen with the rest of us. So that's the reaction. If you were looking for a reaction from me on these meme stocks, that's mine. Josh, you were involved with that a little bit. Any comments on this?
No, I guess to answer like the question that Daniel posed is like, are we?
Hold on. I didn't even frame any of this. Darin just went on a deep dive on a short squeeze.
I did. I mean, anytime you mention meme or short,
no. You missed half of it. Okay, let's rewind.
Let's circle back to Daniel's.
You're saying that this is going to happen to the entire market and is going to just make the entire market go?
Whoa! Why are you jumping ahead so much? We didn't frame it yet.
Frame it, Roger Rabbit.
Are you done, Darin?
Frame it, Roger Rabbit. Yes.
Okay.
No, just mention pies. He'll go off on tangent.
So as Darin mentioned, Avis had a 700% short squeeze from its bottom. Allbirds, which was a Silicon Valley clothing company that made wool shoes, which were awful shoes, has
Yikes.
now they were I don't understand why anyone ever bought them, but they have now transitioned the company to be an AI cloud company, i.e. they want to buy NVIDIA servers and rent them out, right? So the last time we saw this kind of price action in the market, these short squeeze kind of meme stocks, back in 2021, it was companies going from, it was like Kodak becoming Kodak Blockchain, just simply changing their name. It was January 2021.
Yes.
From January 2021 to the end of the year, that year the market was up 30%. And this week on Darin's favorite news station, what's MSNBC or whatever they do the stock news
CNBC.
stuff. CNBC.
MSNBC is even worse. Go ahead.
All right, I don't watch TV, but Tom Lee, who's like a pretty famed
Can't stand him. Yes, go
stock
ahead.
analyst and has a really horrible Bitcoin fund that's done terribly. He timed that terribly wrong. Predicted that he is predicting that the stock market will be one of the best of our lives over the next 18 to 24 months. And Goldman Sachs just raised their target for the end of the year of the S&P to be at 8,000, which is 12% higher.
Excellent.
So the question is, are we so back? All right, Josh. Now that it has been framed, you may comment.
Well,
Tom Lee's been saying this for 2 years, by the way. Go ahead.
Well, as Royce says, markets are designed to go up and to the right. So directionally, you will always be correct with that statement.
Yep.
Yes.
Go ahead, Josh.
The way I've always interpreted it, just based on patterns, is that meme stocks tend to run when there is money sitting idly by, which means that everyone has kind of already cashed out. They're looking for somewhere to park it, but they're not going to park it anywhere long term. So you get a lot of these runs. And if you look, for example, if you look at when Darin's favorite stock, AMC, when it ran up to, I think it was 120 or whatever, it hit, that was late 2018. But we look at what S&P did, end of 2018 into early 2020, and end of 2018 into 2019, it dropped like 20%. Then you fast forward again to, we had another pop in some various meme stocks in early 2020. Then we got the COVID thing. And that one wasn't as bad because I think that was more of an outlier. But then you look at like 2021, when Daniel was just referencing it ran up. And then here we are again, S&P dips another, like 25% again. So to me, it just kind of seems like this indicates that there's a lot of money that's been parked, that's sitting idly by, that needs a place to go, but not somewhere permanent. So they're just chasing a quick high, chasing a quick return, running things up, and they've got enough money to squeeze it, and then they cash out, and they're off to Neverland, or however you want to describe it. But yeah, it's just that.
So they're getting on the roller coaster back up after they've paid their shorts down. They're going to get in with everybody else after they pay the shorts up. Is that what you're saying? They're rolling it back up?
No, they're just riding a quick wave for a quick return, and that's the easiest way to do it.
Well, it was my AMC apes would not be happy with me letting that ride. It was 2021 is when that happened. At the beginning of the year for AMC to go way up. It wasn't 2018. I bought my first AMC stock in 2019. This was before the big meme happened, and big meme thing happened. That's what grabbed me and kept me in that play, because I bought it before everybody else did, and so I even had a lower average at that time than everybody else did, and it started going crazy. And of course, I hung on and lost my shirt at the top. But yeah, I mean, there are other things though, which we look at, which have been part of the pick of the day, is some of them that are bottoming out, and they're doing that curve at the bottom, and they're shooting up after they do that. So there's probably some, like you say, institutions that are getting that quick payment on that ride up the roller coaster again. And they, because they know that that's what's going to happen. If they know that their buddies over here at this investment bank are paying their shorts off, and they're going to jump in because they all talk together. We know they do. And then they're going to jump in on that little roller coaster back up and grab some money, and bam. My own personal opinion, which is, not accredited. That's the way I'll put it. Anything else, Royce?
Shots were fired. Well, that's clear. A little snarky.
Hey, which shot?
Oh, nothing. Well, no.
Right,
your analysis is really good. So I think that a lot of what we have been seeing, a lot of the meme stocks and everything that's gone on with AMC, a lot of people think that, I mean, it's hard to justify. Isn't their market cap like $450-something million? Oh,
it was a lot more than that, of course, when it was, I mean, it's been.
But what I'm trying to figure out is, like, how do you get a market cap that big and your stock is $1 something? That doesn't make any sense.
Exactly. Now they are a world theater. They're the biggest theater company in the world. And you have Cinemark, which is sitting there at $23, $24, $25. So it all goes back to the, at least that's the game that's been played. It all goes back to the bad debt that they've had, and they've had to roll the debt forward, which they've done. And now they're saying, okay, well, now that everything's been rolled forward, we can start pushing the stock back up again. But when you have a big discrepancy like that, 24, 25, you got IMAX, you got all those theaters that are their competitors in quotes, although there's a partnership with IMAX. It's hard to say, okay, this one's 96 cents when the others are at $25, which is what it was at one point when AMC hit its low. So it's, they're putting it off on how much debt is owed out there. And of course the banks can control and say, hey, look, I want my money now. So, I mean, it's kind of like they're controlling the future. And I don't know if they just didn't want to bankrupt a 105-year-old American company, and they said, okay, well, we'll just let you survive so we won't look so bad and let them come back up again. I don't know. I don't know what goes on behind the scenes there. But anyway, their market was that high because of how much had been bought. I mean, the shares that were out there. There were so many shares that were out there that didn't make sense. So
fair.
Anyway.
Okay.
It'll be interesting to see. Yeah, it'll be interesting to see. It'll be a slow thing back up again. That's what they'll do to it. And hope retail gets uninterested. But there's so many that are still hanging on to those original shares. Just like GME. Were you going to share something, a chart?
Oh, yeah.
Oh, you had.
Yeah.
Okay,
Yeah.
hang on. Let me find you here.
And I'm going to share your favorite stock.
Oh boy, I don't.
Oh yeah,
I don't know what that is. All right, let's go here. Let me pull it up. So let's do After the Bell crayons and charts with Royce. And Daniel's head always shows up here when I don't have it beforehand. So let me go ahead and pop in this chart.
All right.
Hold on, not yet. Come on, it's being annoying. Okay. And we have my favorite. Yeah, I got to go to the bathroom real quick while you guys. Jeez. If I had a picture of Vlad Tenev that I had messed with, I would put it up right now. Go ahead.
All right. So I'm going to basically show you guys a little bit of, like I said, I'm a minimalist trader, so I try to keep as little on my chart as possible. So with that being said, I'm going to even turn that off just so that way we see primarily just my Atlas indicators.
You converted me, Royce.
I'm telling you, minimalist, a lot less to play with, and you only have to have a couple indicators out there. Long-term chart is set to the daily. Short-term chart is set to 60-minute. So it means you have long versus short. If the dots are on top, that means basically both the hourly time frame and the daily time frame are saying that a sell trend is beginning. So all the way over here, somewhere around November the 5th, when Robinhood was sitting at about 154, we took our leave and stopped selling our cash secure puts on this guy. Well, let's fast forward. Basically, we saw it go down, go down, go down, go under, and we also have the 1 hour and the daily intermediate band basically sitting here as well. So in order for us to get into a short-term trend, we're seeing that the parabolic SAR for the 1 hour time frame has gone back into a buy. And that means the advanced band on that 1 hour time frame is going into a buy. And in order for us to get into a long-term buy where basically Robinhood can actually see promising numbers, we have to get over that 98, 95 threshold. For the people who are entering early, you're already there and you've been in roughly since about 75-ish. And if you watch my seminars, you would have seen that a couple of Sundays ago that basically we were saying that this was a bottom because we saw that, sitting over there, right? So we saw this, it was bottoming and capitulating. And now basically we're trying to see if it will be able to make it above that or if it will be rebuffed. The other thing that basically we want to make sure that you see is our trend top and trend bottom. In order for the candles to actually make it above the purple line that we see here, probability has to allow it. The fact that probability is expanding past the daily intermediate band means that Robinhood should have a nice long ride to the upside. And also when I turn on my 3D indicator, we want to see, okay, if we get above, how far can it go before it runs into any resistance? Well, the closest resistance is about 126. So there is a roughly a $40 to $45 ride up if people are brave enough and conservative enough to ride it up over the next 1 to 3 months. So that's all I got for that guy.
That was so exciting, Royce. I appreciate you, bringing that up.
Yeah. You know what? At the end of the day, you know what? That's going to be my pick. I won this week. That's my pick.
Crayons and charts. Oh, wow. Wow. So now you're going to force me to look at this.
You brought this on
I'm going to look at this for how many more weeks now? I have to look at Hood?
18 more weeks.
I have to visit the Hood for 18 more weeks. You know, this was one of the originals. This was one of the meme stocks, by the way. And this is what's funny. This is how the investment banks, they wrote it down. I mean, you'll remember this, Josh. I mean, because that's what all the retail people went to, is they wanted Robinhood. They wanted to put all their stocks on Robinhood. This was pre-Webull, and everybody thought how fun and cool it was. And even these guys who've been in finance forever would get on to CNBC and talk bad about Robinhood and how they're gaming it. I remember that whole thing about, hey, they're making this a game. It's like, well, yeah, that's what it is. And then retail started investing in Robinhood, the stock, and it rose and it rose and then investments got, let's short this, and it went down and down and down and down, and then it was a question of whether it was going to survive, and then all of a sudden, I guess maybe they paid their shorts off, and boom, now it's gone up, and now it's at what, 80, whatever it was, 88, whatever ridiculous number it is.
Don't you?
I do. Yes, I do think investment banks made money on the way down and all the way back up again. Yes.
Yes, by following the trend and having no opinion. And
no, it's to go against retail, because the whole battle back then, was.
I won't even put Josh in this. You see, Darin.
No, listen to this though. Listen to this. If retail can make money off of Robinhood back then, that would have also given the message that we don't need these investment brokers anymore.
So
we can make money off of Robinhood.
Retail person made money off of Robinhood.
What?
You're saying?
Oh, of course, some did. Yeah. Well, of course.
But hold on, you're grouping and you're stereotyping.
I'm going percentages. Yeah, absolutely.
All right, show me the data. Where are you getting this percentage of data?
I don't have time. I don't have time to research all that.
No. I need statistics.
Ain't nobody got time for that.
I'm too busy. By the way, Royce's book is throwing poo. Royce's book is done. Voice. I'm trying to promote now. Royce's book is now in audio, and you can go and buy that. I'm also trying to change off of the subject we're on. But yeah, you can go to Amazon and look for Investing in Indicators by Royce Wells. And if you don't like reading and you'd rather listen on the way to work, et cetera, it's now available at Amazon. So go search for that.
Yeah,
Darin, can you read?
Yeah, 5 hours of him reading. It's quite exciting.
You may get tired of my voice, yes. It might put you to sleep at night. If you need it as a go to sleep at night book, yeah.
And refreshing.
It's a textbook, yes. All right. All right, you guys got anything else? Please, no more Vlad. All right.
I'm just saying that's definitely my pick, and now we have to pick the ranges and all the things.
Yes, we do. That's right. I was trying to hurry up. All right, here we go. Let's go back to the crayons, and we got to do the. Got to look at it again. Here we go. All right.
This is just for you.
You're right. Oh, by the way, update. Yeah, this is Royce. Daniel's been the one that's been right every week, but that could change. Royce is creating a spreadsheet.
You know that it feels good.
Royce is creating this spreadsheet
so
we can keep up with it.
So we can keep up with the prices.
Oh my God,
it's gonna be beautiful.
That's what's funny here is that actually it was Josh, right, that was winning.
Not this
very end.
Not this season.
No, this stock this week. Yeah.
He may have been. Actually, no.
Yeah, because it was
based on the spreadsheet that you showed me. You had 350 to 5. I'm sorry, no. You had.
I had the top end, I think.
Nope.
Yeah, no, I had last
350. Pick. Nope. You had.
I had last pick.
You were at the bottom.
Spreadsheet might be wrong then.
Josh
I'll have to go back and look at that. I might go back and look at that.
Based on what you gave me.
Yeah, I think I wrote that down wrong on the because I went back and listened to it today just to make sure. So I think it was Josh at the bottom, and then I had to settle for the very top.
Messed up my spreadsheet.
Because I was.
How dare you?
Last. So right now Daniel is ahead, if you look at it that way, but it doesn't matter to the very end, right? So
we don't know. Nobody knows.
Let's look
We
now.
definitely know. We definitely know.
Royce explained to me to where I understood this today.
Yep.
So
that's what I'm talking
Okay. Right.
All right. So we're good, I think. All right. So let's go take a look back at Robinhood. Robinhood has an absurd range, by the way. It has literally like a $30 range. So there's literally a $7.50 range on this joker.
Okay.
And since there's a $7.50 range, I'm gonna say 63 to 93 just to make it an even $30.
Okay.
And I am going to be that guy and take the very top channel. So yeah. 93 plus. Give me that.
All right. Let's got 70 50 to 70.
He always starts at the opposite end of the spectrum.
You said a $30 range, right?
Yep.
Okay.
Then
so I mean, we can go technically 83. Now you're gonna mess with my head. All right, let's see. Yeah,
but again,
93 to 750, so that's 8750 plus. 8750 plus is where I'm at.
That still drives me nuts how you're doing those.
86.
No, 8750 are 86. No, it's 750.
That's $7, so it has to be 50 cents more, so it has to be 85.50, I guess.
85.50. All right.
To 93.
Sure. Yes.
All right.
There we go.
Public math is dangerous.
Yes. Right. But all right. And now to be that guy, Daniel. I'm sorry. I got to do it because the apes need at least an opportunity to get in here because right now we're dominating. Right now there are 5 picks and only you and I have actually won anything. So let's not give it to Josh because Josh will pick right. Let's put it to Darin.
Boy. Can I
The way
abstain?
Darin
from
goes,
saying-
oh boy, it's just.
That means I have to cheer one way or another for Robinhood. I don't know if I want that. You know, I'm gonna say go down.
Then
and I
pick
have no
the
choice.
the
No.
absolute bottom
Pick
range.
the bottom channel and call it, brother. Come on, let's go.
That's 70, 50 and below.
Is that what you want?
I kind of do. You know
Yeah,
what?
okay.
Just because of what all happened, although it'll be another way Vlad wins is if he doesn't fall into my channel. Yeah, I'll take the very bottom.
All right. So 70, 50 to all right. All right. Sounds
Sorry,
good.
fellow ape. It was I should have taken right below Royce, but I didn't.
No,
I had the chance.
I actually don't. I don't mind that one.
All
I
right.
feel like it's being pushed up by shorts.
All right.
Go ahead.
And now I have to push back to Daniel because it's Daniel. I can't let Josh come in and basically solidify anything. So I need a little bit of chaos.
Of all the stocks, it had to be
I'll-
this one that you gave me next pick.
You're welcome.
I'll go below Royce. Keep it.
Oh,
simple.
no way. Really?
You had the opportunity and you chose poorly.
I stood on my principles.
was
I
actually
stood on
thinking,
my
like,
principles.
really
Principles
not-
don't make money, Darin.
No, they don't. Neither does this contest, but
And-
still.
and no. And this is why the institutions wins and retail loses. They have an opinion about the stock as opposed to just following the charts.
And no
Uh-huh.
principles.
Right?
Mhm. And of all the
that's
other
okay.
stocks, I follow the charts, but this one, AMC
Am I in, like,
and
am I in,
GME,
like,
I
the
don't.
$75 range?
What'd you
All
say?
right. Sorry, say it again.
Am I in like the $75 range?
You're 70 to 78.
Yep.
70.
Okay, perfect.
Wait, 70 to what?
$70.50 to 78.
All right, the
If
78.
I have it
perfect.
right.
That's exactly where I
I'm
wanted to be.
hoping you have it right. All right. And then we're gonna do top range A650 down to 78.
85.50 to you're doing that range.
I'm just
85.50
making sure.
to 93 if you're doing the 750. That's
No, I already did
$7
that. No. So I'm
Okay.
going the opposite direction.
Okay. 85.50 to 78.
So I'm trying to do the 85, the one that's right underneath my channel.
Right, 85.50 to 78.
Yeah.
Yeah.
But
then
wouldn't it be 86.50? Because I thought mine was 86.50 was at the bottom of
No.
my range.
85.50 to 93 is $7.50 difference.
You know what? We're gonna make it. We're gonna give it to you. We're gonna give it to you today.
Let me be right when I'm right finally. on the channel.
If that is wrong, then we're gonna be fighting
That's
later.
right.
But that's okay.
All right. And then 78 to 70.50. So and then 70.50 and below. So that's
Mhm.
which is where we should land.
Yep.
All right. All right, guys, let's wrap this thing up. Get all of us back on here again. Boom. There we are. All right,
There
guys,
you
a lot
go.
can happen, just like it did last week. A lot can happen between now and next Wednesday. Who knows? There's so many things that could happen. So hang in there, invest well, and we will see you next week. And why are you laughing, Daniel?
It's just a really good outro. Like, I just felt like it was really well done.
Thank you. Thank you very much. All right, now I just ruined it. All right, we'll see you. Bye.
Bye.